Hey guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is how to use a Roth IRA backdoor strategies to build your wealth tax free. So there are many ways you can plan for retirement. Some options are better than others in maximizing your tax advantages. Knowing how to do a backdoor Roth IRA correctly is one option that could work for you. Traditional IRA and Roth IRA contributions limit often pose restrictions for high income earners. The backdoor Roth IRA is an alternative route uh, to access the benefits of a Roth IRA regardless of income level. Uh, in financial circles, the backdoor Roth IRA strategy is a savvy method for high-income earners to access the benefits of a Roth IRA. However, it has historically come with some baggage. Regulators and the public have even uh, been skeptical that it's a wealthy person's loophole. In truth, the skepticism wasn't unfounded, but not because of its benefit. Financial advisors and CPAs grappled with the absence of explicit backdoor Roth IRA contribution rules. Unclear guidelines led to the wariness about potential legal and regulatory hazards. As a result, many high income individuals missed out on the opportunity to harness the full potential of a Roth IRA. So, what is a backdoor Roth IRA? A backdoor Roth IRA, a non deductible IRA, contributions converted to a Roth IRA, is a financial strategy individuals use to contribute to a Roth IRA when their income exceeds the limit set by the IRS for direct contributions to a Roth IRA. The term backdoor reflects the indirect nature of this contribution method. So, as of 2025, single filers with modified adjusted gross income MAGI above 1,000 and 1,65,000 and married couples above 2,46,000 are ineligible to contribute to a Roth IRA directly. So, how do you make a backdoor Roth IRA contributions? The first step in the backdoor Roth IRA strategy involves making a non-deductible contributions to a traditional IRA. There are no income limits for making non-deductible contributions to our traditional IRA. After contributing to the traditional IRA, the individual converts the funds to a Roth IRA. This conversion involves transferring the funds from the traditional IRA to the Roth IRA. Since individual has already paid taxes on the non-deductible contributions to a traditional IRA, the conversion typically incurs little to no additional tax liability in assuming there are no earnings on the contributed amount between the time of contributions and the conversions. So this also assumes the IRA has a $0 balance in the account before the non-deductible IRA contribution is made. So what are the backdoor Roth IRA contribution limits and when are the deadlines? The backdoor Roth IRA strategy doesn't have specific contribution limits separate from the traditional IRA and Roth IRA contribution limits set by the IRS. The contribution limits for a backdoor Roth IRA tied to those of our traditional IRA and Roth IRA, which can change yearly. As of 2025, individuals under the age 50 can contribute up to 7,000 annually to an IRA those who are 50 and older can make catch-up contributions of up to $8,000 annually. So, the deadline for making a non-deductible IRA contribution is typically same deadline for filing federal income tax returns for that tax year. Usually, on the April 15th of the following year, contributions for a specific tax year must be made by the tax filing deadlines, regardless of any extension. So, for example, contributions for the 2025 tax year must be made by April 15, 2026. If you file for an extension for your tax return, the deadline for making contributions is still April 15th April, not the extended deadline. There is no deadline for converting non-deductible IRA contributions to the Roth IRA. Most advisors recommend converting shortly after the non-deductible IRA contributions to avoid incurring any earning in the IRA. The Roth conversion taxes earnings who should consider making a contribution. Due to high income levels, the backdoor Roth IRA contribution strategy can benefit certain individuals, particularly those ineligible to contribute directly to a Roth IRA. Here are some scenarios in which making a backdoor Roth contribution might be advantageous for high income earners, individuals whose income exceeds the limit for Roth IRA contributions can use the backdoor strategy to access the tax advantages of Roth IRA. The number second is those seeking tax diversifications, diversifying retirement savings across different types of accounts such as traditional IRAs, Roth IRAs, and the employer sponsored plans can provide flexibility in the retirement tax management. The backdoor Roth IRA strategy allows individuals to enhance their tax diversification by contributing to a Roth IRA. Investors expecting higher taxes in their retirement. If you anticipate being in a higher tax bracket during retirement, contributing to a Roth IRA through the backdoor strategy can be advantageous. Roth IRA withdrawal in the retirement are tax-free, providing tax-free income during retirement years. Younger investors, individuals with a long time horizon until retirement can benefit from the tax-free growth potential of a Roth IRA. They can even maximize the compounding effect of our tax-free earning over time by utilizing the backdoor Roth IRA strategy early in their career. And the second class is those wanting to leave tax-free inheritances as the Roth IRAs offer unique advantages for estate plannings, as distributions to the beneficiaries are typically tax-free, making backdoor Roth IRA contributions can be a strategy for individuals looking to leave tax-free inheritance. And the last one is investors concerned about future tax law changes. Given the uncertainty surrounding future tax laws, some individuals may prefer to hedge against potential tax increases by contributing to a Roth IRA through a backdoor strategy. So, what are the considerations when making a backdoor Roth IRA contributions? So, the pro-rata rule comes into play if you have other traditional IRA assets besides the non-deductible IRA contributions you are converting to a Roth IRA. This stipulates that any conversion from the traditional IRA to a Roth IRA is considered to include a proportional amount of both pre-tax and after-tax funds based on the total balance of all traditional IRAs. As a result, you may owe taxes on the portion of conversion, even if you only intended to convert non-deductible contributions. So, to avoid the pro rata rule when making backdoor Roth IRA contributions, one common strategy is to ensure that there are no pre tax funds in any traditional IRA accounts at the time of conversion. So, that was all about how to do a backdoor Roth. So, I hope the video will be very helpful for you. So for more helpful videos, kindly like and subscribe my channel.